Hey, hello investors and future investors. Welcome to the channel. For today's video, I will be going over the wheel option strategy. And I'm going to show you how you could use this option strategy, especially if you're trading with a small account. Now, if you're new to options trading or you're trying to use options trading in order to get that little extra income in order for you to supplement your 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be going over the wheel option strategy. I'm going to show you how to use the wheel option strategy in order for you to make consistent income trading options. Now, especially if you're new to options trading, the wheel option strategy is a perfect option strategy for you to get started. And the reason for that is that it gives you income as soon as you do these option strategies. That being said, we're going to go ahead and get down and dirty with options. For today's video, we're going to be using none other than Mara Holdings, ticker MARA. So let's go ahead now and open up the option chain by clicking Trade Mara options down to the bottom here. Now, what is the option chain? The option chain is this area right here. Now, what does the option chain do? For those of you that are new, the option chain gives us enough information in order for us to make informed decision before getting into any option contract. Now, for this wheel option strategy, it actually comprised of two smaller option strategy, and feel free to start at any leg, the top side or the bottom side. It does not matter where you start. The most important thing is you start wherever the market gives you. If the market is in bear territory, then you use that strategy. If the market is in bull territory, you use that strategy. And you're going to see what I'm talking about as we go along in the video. So the first part of the wheel strategy, we're going to go to sell and we're going to go to put. This part of the wheel option strategy is going to involve you not owning the stock at all. So now we have sell, we have put. We're going to go ahead and choose our strike date. Now I'm going to go with the strike date of March 14th, and there's no special reason for that. It's just that March 7th is just 2 days away and March 21st is 16 days away. So I'm just going to go with the centerpiece right here, which just so happens to be March 14th. Now, this option strategy, the first part of the wheel option strategy, we're going to go ahead and we're going to choose our strike price. The strike price we're going to be using is going to be below the current share price. As you can see here, the current share price is around 15.05. So we're going to be going with the $14 strike price right here. As you can see, this column here says strike price. Now, with the $14 strike price, that gives me a chance of profitability, once again to the top here, of 72%. Now, a 72% chance of profitability is very good for this first part of the wheel option strategy. Now, with an income option generating strategy, you always receive money as soon as you do the trade. The money we're going to be receiving right here is going to be 48 cents or 0.48. Now, we are dealing with option contract, and each option contract contains 100 shares. So in real life, this 48 cents right here is going to work out to be $48. You're going to multiply your 48 cents right here by 100 shares, and that should work out to be $48. This is the first part of the wheel option strategy, and this is known as the cash secured put. So, like I mentioned earlier in the video, the wheel option strategy allows you to get money as soon as you do the trade. That's what's really phenomenal about this option strategy. Now, the money we're receiving in this case is going to be around $48. We're just going to round it up. Now, there's a couple ways this trade could go, and one of those ways is what's going to allow us to get into the actual wheel option strategy. Now, before we continue, in order for you to do the cash secured put, you need to leave some kind of collateral. The collateral that's going to be required is going to be a cash collateral. Hence, the first part of it is cash. So the amount of collateral you're going to be leaving is going to be determined by multiplying the strike price you chose. And once again, that's $14, and you multiply that by 100 shares. So your collateral in this case is going to be $1,400. Now that you have $1,400 leaving collateral, you could go ahead and execute this trade. And once again, you're going to get $48 premium. That premium is yours to keep no matter how the trade goes. And this premium is income that you could do whatever you want with, and it also allows you to grow your portfolio. Now, come expiration date of March 14th, there's a couple ways in which this trade could go. Here is the first way. If March 14th expiration date comes by and this share price stays above the $14 price, then you get your $1,400 collateral released back to you. And you also keep your premium that you received initially. That now allows you to go ahead and do this trade over and over again until you get assigned. Now, assignment means that the trade goes against you. And we're going to get into assignment shortly. Now, I want you to focus on the percentage gain with doing the wheel option strategy or any income option generating strategy for that matter. Don't focus too much on the monetary value here. Focus on the actual percentage gain. Now, to get your percentage gain, you're going to divide your $48 right here by your $1,400 right here. And that should give you roughly around 3%. Now, 3% gain in just 2 weeks is extremely high. Continue to trade safely, and that's going to allow you to stay in the market over time. Now, the other way this trade could go, come March 14th, once again, if this share price right here so happens to fall below this price right here, then now we're going to lose our $1,400 that we left as collateral. However, this is one of those option strategies that is known as a win-win option strategy. So although the trade goes against us and we lose our $1,400, we're now going to have 100 shares of Mara in our portfolio. Now, once again, good news, we still get to keep our $48. Remember, that is yours to keep no matter what. Now, why would anyone want to do the cash secured put? Well, it's quite simple. In order for you to buy a stock at a cheaper price than what is currently trading at, then you could use this option strategy to get that stock at a way cheaper price. But now we're assigned, that's half of the wheel option strategy. Now we're going to go ahead to the other half. So now that we're assigned, we now have 100 shares of Mara in our portfolio. Now, before we do that, the cash secured put is known as a bullish option strategy. The reason why it's a bullish option strategy is because you do not want the share price to go down. So your mindset, the share price is going to continue going up or it's going to stay above your strike price you chose. Hence, it's a bullish option strategy. So once again, now we have 100 shares of Mara in our portfolio because we are assigned. What do we do about it? So now we're going to switch over to the second half of the wheel option strategy. And for that, we're going to go to sell and we're going to go to call. Now we're just going to maintain the exact same strike date just for the purposes of this video. The strike date is going to change because you're going to be assigned at the strike date you choose previously or before. So now we're going to go ahead and we're going to choose our new strike price above the share price. But before I do that, remember, we will assign at $1,400. Remember that. So now we're going to go ahead and choose our new strike price. And I'm going to be going with a chance of profitability of, let's say, 84% right here. Now, this is based on my own risk tolerance. The reason I'm going to go with a chance of 84% is because I like to choose a high chance of profitability because this is a call option. The overall trajectory of the market always goes up. There will be some few pullbacks every now and again. There will be a crash every now and again. But if you stay in the market long enough, the market always goes up. So on the call side, you always need to choose a higher chance of profitability because the likelihood of it getting to that price is way higher than on the put side, except for in a bear market that we're experiencing right now. So let's go back to it. So with the 84% chance of profitability, that's going to give me a strike price of 17.5. And now I'm going to receive money once again. Remember, this option strategy is income generating. The amount of money I'm going to be receiving is going to be 0.3. Once again, we're dealing with option contracts. So each option contract is multiplied by 100 shares, making this $30 premium. This second part of the wheel option strategy is known as the covered call option strategy. Once you do the covered call option strategy, you're going to receive money right away. In this case, it's going to be $30. We're going to be rounding up once again. Very important. That $30 is going to be yours to keep no matter how the trade goes. Now, there's a couple ways in which this trade could go, which is going to lead us back to the first option strategy we did, which is the cash secured put. Hence, the wheel option strategy. You just keep going over and over and over. Now, come expiration date of March 14th, if Mara is trading at any price at the 17.5 and below, then we get to keep our 100 shares. Remember, we needed that 100 shares to be assigned in order for us to do the covered call option strategy. In order for you to do the covered call option strategy, you must have 100 shares in your portfolio. Whether you're assigned 100 shares or you need to go out and buy 100 shares straight up, you will need 100 shares or more. So you're going to get to keep your 100 shares. You're going to get to keep your premium. And now you get to do this trade again and again until you assigned once again. This option strategy, the covered call option strategy, is another win-win option strategy. Here's how you're going to win the second time. Let's say this trade happens to go against you, and come expiration date of the 14th, this share price just happened to be trading higher than the 17.5. Well, now we're going to lose our 100 shares. We're going to lose our 100 shares, but it's not such a bad thing because now we're going to be losing our 100 shares at the strike price we chose, which was 17.5. Now, in addition to our $30 premium we receive, remember, that's ours to keep no matter what, you're going to be receiving what's going to be known as stock appreciation. Your stock appreciation in this case is going to be 17.5 minus $14. Remember, the first part of the option strategy, we were assigned at $14. Once you subtract that, you will be receiving $3.5. Remember, we're dealing with option contracts here. So that 3.5, you now multiply it by 100 shares, and that's going to give you $350. So within a 2-week period, you stand to gain $350. So that's your second win. Now, let's say you are not assigned come March 14th. Well, you should be fine just making $30. The $30 here is going to represent a 2% gain. A 2% gain, once again, every 2 weeks is a very high gain. It is very easy for you to make very consistent income. When you look for these small percentage gains, you're allowed to stay in the market over time, and that is how you build your portfolio. Now, once you are assigned and you're now forced to sell your 100 shares at 17.5, then you have an opportunity to go ahead and do a cash secured put once again. However, a word of caution. For the covered call option strategy, you chose a strike price of 17.5 and now you are assigned. It does not make much sense to go now and choose a cash secured put on the same stock because in the real life, this might be trading at a way higher price. Let's say it's going to be trading at $18.50 or probably $20. It would not be advisable for you to go do a cash secured put on a stock that was just recently trading at $14 and you're going to do a cash secured put at $18. It does not make sense. So with the wheel option strategy, always make sure you choose a stock that's pretty stable, that stays within a certain range. If the stock were to spike up higher than you're comfortable with, then you do not need to go ahead and do the cash secured put. Get into another stock and you can do a cash secured put on that stock as well, while you wait for your previous stock, Mara in this case, for the share price to retract a little. So, in summary, the wheel option strategy comprises of 2 separate option strategies, which is going to be the cash secured put and the covered call option strategy. Feel free to use any one of it when you get started with the wheel option strategy. If you already own 100 shares of the stock, then go ahead and do the covered call option strategy. If you do not own any of the stock, then the correct way to start is going to be a cash secured put. Whenever you do become assigned on any part, the covered call or the cash secured put, then you go ahead and you do the opposite strategy and you just keep the wheel going. The most important part of the wheel option strategy is that it teaches you 2 income option generating strategy where you receive premium every single time you do it. That premium is what's going to allow you to grow your portfolio over time and keep you in the market over the long run. So for those of you that stayed until the end of the video, I just want you guys to know on this channel, our main focus is on small account portfolio, how to grow them consistently over time. I myself grew a small account portfolio, and when I started doing options about more than 5 years ago, there was not enough information out there on how to grow a small account. So this is why I make these videos. If you know anyone that's struggling with a small account, or you're new to options and you want to do some safe option strategies, then this would be a perfect time for you to go ahead, subscribe to the channel, like the video, and if there's anyone out there you know, feel free to share this video with them. Let's help as many as we can. If you have any questions concerning the covered call option strategy, the cash secured put option strategy, or the wheel option strategy, feel free to leave me a comment down below. Now, until the next video, keep pushing your investments.